The top 3 reasons your trade ends in stop loss. Now the first one is your trade doesn't follow higher time frame analysis or the higher time frame trend. What I mean by this is how many of you tried to call in the bottom of EU for the last month? For October, for example. This has been bearish for the whole month, and how many of you tried to long it here, long it here, long it here, long it here, and lost so many R's just trying to long, when you could just profited the whole move by shorting, and getting paid by that, and following the trend, and not getting wrecked by trying to catch a falling knife. Another thing is, a lot of you might trade Asia, and that's perfectly fine. I advised everyone that tries to follow my strategy to look at Asia as well. You can see on my indicators the yellow boxes. A lot of you solely look at Asia without looking at maybe other things that's just around Asia. For example, here, the 30. Yeah, so right here you can see we broke Asia highs, and maybe because you trade Asia liquidity you're looking to short, but you're not looking at this liquidity and even this one. That's just the previous daily high. Maybe it didn't touch it. Maybe it made perfect double highs or something. But you can see this high, even though it broke Asia, it's insignificant because it didn't broke the previous daily high. That's just like around Asia, which makes it technically a liquidity. And this break isn't strong enough, like it isn't like above 2 pips for it to be called sweep or run liquidity, and just becomes liquidity. And then we get to the other liquidity, right? So just watch out for that. For example, here you have another break of Asia, but there's more highs to come. There's other highs to come. It's not just the Asia by itself. It can be, but you also gotta zoom out and see what's on the previous day. Here, if we had come to take Asia, we'd also had to come to take this, because this is also important. If price didn't go up and instead wanted to come take Asia down, it couldn't do this. It had to make at least to this liquidation. Alright? So just pay attention to that. The second point I want to mention is timing. A lot of you gotta have a timing on your plan. Times of the day you trade and times of the day you don't trade. For example, if you're trading USD and you're trading Asia, you're just asking to get stop loss. Like if you see this massive run of liquidity and you have your limit put here, but then you get in on Asia, or you're looking at Asia even, and you see this like internal break of structure and you try to short it here. Like, what the hell are you doing trading Asia on a European and American pair? You're gonna get stopped out. So you need schedules, and that's defined by a plan. Sorry, that's defined by a plan, and yeah, that's decided by your plan. If you're profitable on London session, or if you're more profitable on New York session, or if you are not profitable on New York session and you only trade London, that's things you gotta watch it for yourself and check your data to see it by yourself. But yeah, and then there's also like a lot of you guys are trading before London Open or in the London manipulation. So in London, I mean, in the sessions you want to be trading the kill zones. On ICT kill zones, you just get an indicator and you should be fine. But you gotta understand that with sessions on London, for example, I mean, this is super shit. Let's say on London, the first 30 minutes are manipulation. All right, so you gotta watch out for that, because it's usually manipulation. You'll usually have a good setup, but if these are in the first 30 minutes, and then 9:30 comes around, 9:30 for me and UTC +1, Central Europe time. 9:30 comes around and just liquidates all the people that was placing themselves in London Open or Frankfurt. Frankfurt can give the high of the day or low of the day, but it can also just build liquidity for London Open. And London Open is usually 30 minutes of manipulation. Same for New York. New York, it's the hours timing, the timing of hours. That's usually, depends on what you call New York, but I would say 1 hour and a half into New York Open. So it's usually when there's most news. Alright, so this is the news timing. And everything before that is most likely a trap. So you gotta watch out for that. So remember that you can have two identical charts, but if those same charts have different timings, it's a completely different story. Alright? Just remember that. If you see this movement during Asia and another movement similar during New York, it's completely different. It's completely different, alright? It will be a completely different story. So watch out for timings. See where you perform the best, but obviously don't trade times like Asia on USD, for example. Alright? And the third one, and this is probably the most, the ones that's gonna give you the most value out of this video, it's you're not waiting for a trap to be formed and you're placing yourself in it. So what I mean by this, it's the oh, sorry about that. It's not easy to write with this, but it's essentially a fake breaker structure. Let's imagine you have the liquidity and just run it. And once we run it, let me do this better. Once we run this liquidity and we have a breaker structure, mostly you are going to be looking to place yourselves on the order block, which is valid, as we took out good liquidity, for example. We just took out a good liquidity. We just have done a breaker structure. So right now you're placing yourself here, which is valid. But most of smart money traders are also looking at this. So what is price going to do? Price is going to take them out. What the fuck? Price is going to take them out and then make the real breaker structure and continue the move you pretended to. Okay, so definitely wait for traps. This is like a must in my plan, a must in my trades. You'll see that most times price will always take out the liquidity twice, just to give out a trap on the first run. As you can see here, major run of liquidity of this red line, sorry. And you see the breakout structure. You see price giving initiation, dropping down, making internal breakout structure, and then we just run it again. And this high was also formed on the New York trap timing, which is lunch for my time, and it's also a time period, a key window, which you don't want to be trading in, because it's mostly traps. So if you would notice if you use the MSU and if you use timings in your trading, you would avoid this trap. And then you get the correct breaker structure here and some movement downwards. It would have worked, but it's just for this example. Same thing with here. We break this high, we break it once, give some initiation right here, and then we break it again, and then we deliver some movement. Again, we have major highs just above. Of course, you're not gonna get so much movement, but like here, we took out this high, made efficiency with the price. We broke it once, came down, and then came to take out everybody. And you could have gotten some movement here. All right. So watch this video again if you need to. Timing, MSU, and higher time frame analysis. These are super important to improve your trading, and definitely if you want to trade with us live on the markets each and every day, join the Discord. It's free, first link in the description, and I'll see you guys the next time. All right.